Good morning, everybody. Coach of Serene Education with my look at the matrix this morning for Monday, the 4th of February 2019. Hope you had a fantastic weekend with family and friends, guys. Let's have a look and see how things have progressed since non-farm payroll, which was the non-farm payroll, the employment change figure came out far stronger than expected, almost double what they forecasted. So very strong dollar continuation on the employment side of things. The average hourly earning figure, however, contracted somewhat. They expected just a slight 0.1% contraction, and actually contracted almost 0.3 from. So for the previous figure 0.4, they forecasted 0.3, came in at 0.1. So 0.3 of a drop on the average hourly earning figure. However, still above the expansion. The unemployment rate rose slightly from 3.9 to 4%. But notice, remember, we are at all-time lows for this unemployment rate. So really, well, we are right down at the bottom in terms of the unemployment. So very, very strong. Manufacturing for the US market also came out that day on Friday, and the previous figure was 54.1, came out at 56.6. So far stronger than the forecast, which was for no change. So overall, still moving, still underlying momentum on the US dollar. However, we do have to be aware that the further into 2019 we go, the more likely we're going to start to see that slowdown starting to bite. Interest rates hikes in times of 4, they're expecting 4 more. They've chosen not to raise rates last week as a standoff and gauge the global market. And the global market is the current the current issue for the US market. China very much slowing down. Trade wars is predominantly a major reason for that. This is now having a knock-on effect within the other Asian economies that surround China, which is Australia, New Zealand, and Japan in particular. And then you have Brexit issues, worries within the European Union. You have other entities within the European Union which are a major concern. The European Central Bank is having more of a slight issue regarding its QE plan. There's word going around that we might see recession in some countries. Italy apparently has technically gone into recession, which is not great because the Italian government is giving a lot of problems. Then we have Brexit with the UK. There's a lot of uncertainty, so just keep that in mind, guys. But looking ahead for this week, we have, in terms of strong data, we know the Chinese have now broken up for their new year, so they're pretty much not going to be around all week. We might see more weaker stats coming out, primarily because the Chinese market is now on the new year break, so we need to keep that in mind. However, in terms of data, Tuesday night we have the Royal Bank of Australia's rate statement, so we need to keep an eye on that. We also have tomorrow, Tuesday, we also have the non-manufacturing PMI results for the USA market. Expecting contraction there of 0.6. And then Wednesday we have the Royal Bank of Australia's Governor Lowe speaking, followed by the employment change quarter-on-quarter figure for New Zealand and the unemployment rate figure as well. Thursday we have Fed Powell speaking. So there again, please, when he talks, everybody listens. So if you're trading Thursday, keep that in mind. But we also have the Bank of England's inflation report, and then we also have the MPC official bank rate vote. They don't expect anybody on that non-member party to contemplate raising rates at this particular point. There again, we have the monetary policy statement summary to follow that. So if you're holding pound crosses, if you're still trading pound crosses, be aware that come Thursday you should be looking to manage those positions quite more aggressively, purely because of the announcement for the BOE inflation, the monetary policy statement as well. Then Friday we have CAD employment change stats, and we have the unemployment rate for the Canadian market. So there are some news announcements. Please be aware, or please look at your economic calendar to see what they are. And if you are trading these particular pairs, just make sure that you are trading with the right money management risks. Okay, I'm going to spend looking at these 4 measures over here on the hard right left edge. However, here on the matrix, we want to see clean charts. So if you look at the MA, for example, we want to see that remaining the same color throughout, so we know that we still have clearly a strong trend, higher or lower. So if you look at the pound to US dollar, here's a good example. The monthly right through down to the 5 minutes, the arrows are all negative. So there again, we should be looking for negativity, but we have to be aware that the weekly and the daily, we're starting to see some apprehension here. So that is what I'll touch on now when I go down to, or when I spend more time looking at that particular pair. The euro against US dollar. So I'm going to start with the euro against US dollar. Here again, I'm just going to apply the Forex Made Easy template to this. This is our level entry template. Here again, if you look at on the hot right edge, look at the candlesticks themselves, you'll notice that the candlesticks have exuded more wick compared to previous years. So there's a lot of uncertainty that's crept into price, and this has led to a very volatile high and low point through each of these months. And we can see that through a lot of these months, traders were well aware of the increase in volatility or uncertainty. So even though we're looking for negativity here, you'll see that there's a lot of wick. So a lot of profit taking within these months, which leads to a lot of wicks on the candlestick, which is a sign that we need to be wary, cautious, play caution to the wind. Price is still trading below the 200 period moving average, but still being supported currently by the 50 period. So intermediately, we can see that we do have a negative trend. However, it's a very cautious downtrend. RSI has been flat, but it's still trading below the midpoint, which is a negative sign. And the fast line is below the slow line, and the histograms are below the midpoint. Ideally, in a negative trend, we want to see those moving average lines below the midpoint as well. So you can see over here, we've had a strong move up. You'll see that through this period, the fast lines and the two moving averages in particular, and the histograms remained above the midpoint. So here, everything's telling us to look for selling sentiment. So if you look over here, the one concern we have is that 50 period moving average. Notice the whole last month, we saw a very volatile month last month, in excess of 300 pips, but notice the candlestick close. Still lower than the previous month, which is a good sign. However, a spinning top nonetheless, so indecision candle. So we have to be very cautious. We are trading at a major support and resistance level that's clearly been in play for most of 2015, 2016, and the latter part of 2017. It acted as a support mechanism. So we had resistance to 2015-16, support through the latter part of 2017, and now we have another support mechanism here, so the hard right edge. So we have to be aware that we're trading into a strong support and resistance level for a long time. We have 1, 2, 3. We're going to our fifth consecutive year now where we've had price now testing the same particular point. So we have to be vigilant. Down to the weekly, you can see that 200 period moving average now is clearly that support level, which is at that yellow line, which represents my support and resistance level. So here, a lot of support over the last 12 or 13 weeks. We have to be aware of that. Price has been trading within this very low range. Okay, so we have to be aware of that. 2018 resistance level highs, the breakout, then the move down, and you can see the choppiness now that's pretty much come to play. So we are trading still in a downtrend. The 50 period moving average above price, but the 200 is below price. So they're again in a strong downtrend in this case. Price will need to be below the 200 period moving average, a nice close below. And if you look at the actual chart, you'll notice that price has failed to close lower. Yes, it's traded below it on numerous occasions, but it's failed to close lower. And that's what we need to see on this particular pair, is we need to see a defining close lower to emphasize that we do have continued selling with direction. Failure to do so is no trade. As long as it trades within the consolidation, rather stand aside. Do not get involved. Okay, 200 below price, 50 above price, as I mentioned to you. The RSI is still below. We're seeing convergence now, even though price is testing the same point over time. The RSI relative strength of that selling has weakened, which is not a good sign. There again, another sign that we need to stand off. MACD, fast line above the slow line, histograms above the midpoint. So we have a clear consolidation now because the MACD has gone bullish in this downtrend, which is not good. That tells us that there's no further selling. If we're looking for selling, we've got to see the MACD being fast line below the slow line, histograms below the midpoint to indicate that. Okay, so we don't have that at the moment. Like something over here, a lot of consolidation, then we had the breakout, and everything started to point for a continuation down. We don't have that yet, so hence the reason we need to remain off, standoffish until further notice. Down to the daily, you can see that consolidation range that's taken place over the last 13 or 14 weeks. Very messy, still below the 200. okay, which is a sign that we should still be wary. Even though it's going sideways, we should be still wary that price is still trading below the 200. There again, more of a negative stance. However, if we are to see more of a change in that, we need to see price trading above the 200 and remaining above the 200. We had a slight breakout early last month, but failed to maintain that level to kick on. It actually hit into it, fell back, and then we saw price then reverting to the downside again. So here again, another sign. Please pay caution on the hard right edge. Okay, so 50 above price, 50 below price, 200 above price, RSI above, MACD, everything is positive. So histogram's above the midpoint, fast line above the slow line. So everything's telling us to buy here, but we clearly have a strong ceiling. Okay, so we have to be vigilant. Rather pay caution to the wind. Look to see how each day progresses. In this case, no new lows, likely to bounce high. But if we're bouncing high, we need to be trading above the 200. Vice versa, no new highs, then we're likely to fall. If we're likely to fall again, what's going to happen? We're going to do the same thing that's happened over time. Rinse and repeat. If we're trading into a high point and we fail here, it's likely to move back down to the low point. Because remember, price has been trading within a range. So here again, ask ourselves the question, strong ceiling level, further drop. Okay, so just keep that in mind.